Welcome, I am Ernie Goss, research faculty member here at the Craig School of Business at Fresno State University in beautiful Fresno, California. Here we are on the first business day, as I am always, reporting on business conditions for the previous month. Now, that would be, of course, December of 2016. Now we're into 17. Well, how did things end and how they look going forward? Well, the overall index was down a bit, but still in a very healthy range, pointing to good growth in the weeks and months ahead. Now, this is 3 to 6 months we're looking ahead. Things look really good. The overall index was above growth neutral for the fourth straight month. That's good. It did drop, but again, it dropped to a healthy level, 54.5 from November's 55.6. Still in a good growth range, so it was a good report. Now here I'm going to bring up a chart showing you profiling the overall index for the four-county area. That's the four-county area for the Fresno metropolitan area, what we call the San Joaquin Business Conditions Index. Take a look at that from June of 2014 to December of 2016. There in red is the San Joaquin Valley, and as you see there, it did drop. In blue there, you'll see the U.S. index. That number will be released later on this morning. I expect it to be up as well, and probably the two are moving right close together. They may be right there in tandem with each other. The job gauge for December, down below growth neutral. I don't expect that to continue. 49.0, that's down from, fairly considerably down from November's 56.2. Now, job growth, the area has gained 6,000 jobs over the last year. That's good, and it's improving. A growth of about 1.8%. Construction, 300 jobs. Doesn't sound like that much, but it's 2%, and that's improving. Manufacturing gained 600 jobs, 2.4%. That's improving as well. The number one factor, and this is very important, number one factor restraining growth, at least according to our survey participants in December, is finding and hiring qualified workers. Almost 4 of 10, actually 38.5%, but 40%, 4 of 10 said that's the number one factor. Okay, now what to watch for going forward in this next month? Keep an eye on wage growth. Wage growth number will come out this Friday with the U.S. Bureau of Labor Statistics, and that will be their employment number. If wage growth on an annualized basis is moving above 3.5%, get a little concerned. Now, of course, you think, well, that's good. It sounds good. It is good. However, that would be too inflationary. The Fed's already indicated they're going to raise rates by three times this year, and that's about 75 basis points, 0.75% a number. That's something to keep an eye on. CPI, Consumer Price Index, for December. That comes out on January the 18th. Very important number. Keep an eye on that. The overall, the core, which excludes food and energy, is already above 2%, heading to 2.5, 2.6, 2.7. Look at the headline number. That includes food and energy. That number is moving above 2% as well. Real concern. Watch oil prices. Now, OPEC did implement supply restrictions, and they seem to be at least sticking right now. Prices are up about 6% since June, over the last 2 months, I should say. That's a concern if these prices continue to move forward. But as long as we keep them below 60, we're fine and dandy. Now, what are the risks? What are the big risks going forward? I think, as I said, I think headline inflation moving up. That's overall inflation moving up above 2% and on its way to 3%. Big danger. That would mean higher interest rates. Trade restrictions. Too much talk about that. For an economist, we economists see that as not a zero-sum game. A zero-sum game is our loss is equal to their gain, or our gain is equal to their loss. Not correct. Trade is good for both parties as long as it's a good trade deals. There's too much talk about trade restrictions. Too much talk about tariffs. Not good. Strong U.S. dollar is also something we need to be concerned about. Now, what's the outlook going forward for the next 6 months? I expect the four-county area to add only 2,500 jobs. As I said, too much, not enough qualified and skilled workers out there. So that's going to slow growth down. There's still going to be 1.5% annualized, and that's not bad. It could be better if we had more of these skilled workers, whether it's electricians, it's plumbers, whether it's welders as well. So that's it. Well, that's it, folks. It was a good report. I expect the numbers to be good for the first half of 2016. The four-county San Joaquin Valley the business condition index is looking good. Things are looking promising. So until we meet again on the first business day of February, when I'll report on business conditions for January, may your economic cup runneth over.